Hi everyone, let's cover my Elliott Wave analysis on Bonk. Starting on the daily time frame with the bullish scenario, we're looking at a multi-1-2 and continuation to the upside. The invalidation is the low here at 1143, and preferably this wave 2 that we are working on right now is finishing either before or around the vertical line on my chart, sitting on the 27th of August. The vertical line is a fib time comparing the higher degree wave 2, the one that we already finished, with the current wave 2, which is a lower degree wave 2, and preferably a lower degree wave 2 is a little bit shorter or equal in time compared to the higher degree wave 2, but not significantly longer. Now this wave 2 has to be a 3-wave corrective structure, and at the moment when we just look at the chart, we can see a 5-wave swing. 1, 2, 3, 4, 5. However, if we would label this an impulse, and then for the bulls a wave A, you still look for B and C, then your zigzag to the downside, A, B, C, is going to be very long in time, which is not preferred because it's going to be much longer than the higher degree wave 2, which lowers the probabilities for a multi-1-2. So instead, what I would prefer to see for the bulls is that inside here, we have a zigzag or zigzag family structure, right? Like a WXY. So for example, A, B, wave C, that's your W, you have your X, and you're looking for an ABC to the downside being wave Y. This structure, also in time, can easily finish somewhere around the vertical line, the 27th of August. And after a wave Y, you would look for price to continue towards the upside. Now, a double zigzag to the downside can mimic the price action of a potential impulse, right? 1, 2, 3, 4, and 5. But instead, it's an ABC with a extended wave C here, reaching the 1.618, which is also still a target for a wave C. You get a shallow wave X and another ABC down in a wave Y. So just be aware of this scenario. Now, for your wave Y, you do like to see wave A, wave B, wave C. And then you'd like price to reverse. So it is a 3-wave structure to the downside, right? That you are ending with basically down, up, down, and then you move back up. It's not a 5-wave structure that you end with. 1, 2, 3, 4, 5, okay? That's a very big difference. Now we are also at an area of support, which is the previous range. So you can see price made the high, moved to the downside. After a bit of ranging, we basically move back in this gap. Naturally, you're going to fill all of this price section because, as you can see here on the daily time frame, there's not a lot of structure here. The next area of structure is this range where we are right now, sitting between 2399 and 1975. Generally, you would expect at least a bounce when it gets tested for the first time. Of course, this was the first time test, so sure, we had a bit of a bounce, but preferably we get a bit of a larger move. Now, this whole range acts as an area of support, right? The high to the low of the box. You could also swing the low of this range over here, take the liquidity and move back up. That's all fine, but preferably we don't lose this area of support because below I don't have a lot of stuff going on. These are the volume levels, the point of controls, right? That are either resistance or support. And currently we are at support. We are at the volume levels of this range, the monthly and weekly point of control. We just touched it. Now to the downside, if you would lose this box, because of course inside this box you also have the value area low here and the value area high, of course, right, which was touched over here. So you still have the low as support as well, and then a swing failure pattern. But if you lose this box, the next area is 1670, which is a significant move to the downside. I mean, it's 16% from the low of the box, and it would be an incredible additional 26% from where price is now, which in total would be a almost 60% move to the downside. So, you especially for the bulls, preferably you don't go that far. If you do, it doesn't mean any bullish scenarios are invalidated, at least as long as you don't go down there after a much more significant amount of time. So if you do fall down, preferably let it be relatively soon, right? And not take too long, because arguably that would be more bearish. And then we go to the bearish scenario. And in the bear scenario, we're actually also preferably looking for a bounce to the upside. So that is quite similar between the two scenarios, the bullish and the bearish scenario. You preferably just see a bit of support where price is now, like the range that we are in. But in a bearish scenario, this move up is counted as an ABC. The common target for C is touched. C also ended on an increased amount of volume, which is quite typical. But here we are then looking for a 5-wave move down, right? 1, 2, 3, 4, 5. Impulse to the downside, wave 1. Now, we like to end wave 5 over here somewhere at support, preferably, and then look for price to move up. Now, the main difference, right, is that here your wave 1 should end with a 5-wave structure. 1, 2, 3, 4, and wave 5 has to be a 5-wave move. Either an impulse, 1, 2, 3, 4, 5, or a diagonal, which also is a 5-wave structure. 1, 2, 3, 4, 5, and then move up, right? Again, preferably you find support on this area anyway. Now, as mentioned, the bulls like to see a 3-wave structure to the downside. So that is something we have to pay attention to. But in both cases, we preferably find support in this area. Now, of course, the bears are then looking for a 3-wave structure to the upside in a wave 2 and continuation down in a wave 3. The bulls are looking for a 5-wave structure to the upside and 3-wave moves down. 5 waves up, 3 waves down, etc. Right? That would be bullish, and we are looking for continuation. So in both of the cases, we preferably look for support here and a bit of a bounce. Okay, cool. But then as the bounce is going to develop, is it 5 or 3 waves? Which is going to be quite clear. I mean, if we look at previous bounces, right, this is high time frame, of course, but 1, 2, 3, 4, 5 to the upside, right? That's something that you want to see if you're bullish. Maybe on the 4-hour time frame, 1, 2, 3, 4, 5-wave structure. Look at the Bitcoin chart, 4-hour time frame, and go to the bounce to the upside from 98K. You can see a very nice 5-wave impulsive structure to the upside, followed then by a sideways on Bitcoin 3-wave correction continuation, right? Which eventually created a new all-time high. So that is a very big difference between the two scenarios, right? Bullish scenario is ending with a 3-wave structure. Look for 5 up, 3 down, 5 up, 3 down continuation. Bearish scenario, end with a 5-wave structure and get 3 up and 5 down, okay? If we look at Elliott Wave Simplified, which is the first video in my Elliott Wave beginner playlist, I can't make Elliott Waves more simple than this, and trading Elliott Waves as well. So I have a bit of a grind in the beginning over here, right? Lots of overlap and rubbish and messy. We get a quick move to the downside, followed then by, again, a bit of a grinding structure with a couple of new lows. The average volume is moving down as well, which you can see if you toggle on the volume MA, right? You can see over here that the average volume, the yellow line, was higher than where it is at the moment. So the average volume is moving down as price is moving down, which is something that you do like to see when you're starting to look for a bounce to the upside from an Elliott Wave point of view. And that is why I drew the curve here, right? Because as price is now creating all this overlap again, volume moving down, couple of lows, you're slowly starting to look for price to eventually turn around. And then it becomes interesting to look at areas of support, like the point of controls where price is now, or the value area lows. If I would do this, right, then you have a value area low here sitting at 2155, right? You can put a volume profile on your chart for some more information. But in general, looking for a bit of a bounce here is interesting. So if we then look at the probabilities, right, go back to the daily, then on the daily time frame, currently price here is testing support, and it would be interesting to look for a bounce to the upside. So it's important you realize, what are my signs of strength? What do I like to see to enter a position? Where am I wrong? How much am I risking, right? Portfolio size, right? Generally, I recommend 1%, max like 2-3%, but not anything beyond that. So you got to know what you're looking for. But at least we're at support, and in both the bullish and bearish scenario, it would be interesting to find support here and then look for a bounce to the upside. For the bulls, possibly WX, ABC, and a wave Y, move up, right? Currently, of course, at the point of control, still have value area lows down here, or potentially the swing low that we could swing failure pattern, right? Just take the liquidity and move towards the upside, and then the move up should be 5 up, 3 down. Now, a more safe setup, I suppose, from an Elliott Wave point of view for the bulls, would be to wait for a 5-wave move up, a 3-wave down, and that is going to be a very nice entry, right? With a bit more information, okay? But then again, in general, it would be nice to look for some signs of strength where price is now and price moving up. For the bulls, preferably a WXY. For the bears, and a wave 1, 3-wave move up in a wave 2. Currently, on the higher time frame, there is not necessarily a very clear higher probability for the bulls or the bears. Of course, we're still in a bull market. You know, people are talking about alt season and everything is going to pump 100, 200, 300%. I don't know. I always stay very level-headed, I suppose. Most of the subscribers also like that. I'm not someone that goes with the hype. Also in a bear market, I am someone that is not scared or, you know, it's just the chart. We just have the chart. The chart gives info. We use the info. And that's the way it is. And if we look at this chart from an Elliott Wave point of view, and at the moment on a daily, there's no clear preference for either or, right? We can count this as an ABC to the upside, and then a 5-wave move down, wave 1, get a 3 up and continuation down, right? And we get a bounce, which should be a 3-wave structure. And for the bulls, well, 1, 2, 1, 2, preferably get a WXY here and look for price to move up, which in both cases would lead to relatively similar price action, as preferably you look for a bounce in this area, right? And then depending on the bounce, you either look for continuation or for price to turn around and then take out the low and go to lower prices. So trading wise, it is relatively easy to trade Bonk in the area where it is now. You're expecting quite similar price action. It's just about where, you know, about your plan. Where do you put your stop and this and that and this and that? What are your signs of entry and all that good stuff, right? So yeah. If price would continue to the downside, then I will consider maybe a bigger WXY or multi-1-2, 1-2, 1-2, 3. But a multi-1-2 will have lower probabilities because the 2s did not overlap, which is something you generally like to see. So a WXY would then have higher probabilities, but let's wait for more information. This is just what I wanted to say, which hopefully is helpful and valuable to you. On the left, you see a video on the simplest way to use and trade Elliott Waves without even counting. And on the right is the altcoin analysis playlist where you can find many more altcoin videos. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.